What's up YouTube, it's Louis here bringing you today's cryptocurrency video. We're going to take a look at Bitcoin. So not much has changed. We know that if we do lose the 1414, this purple line, 42,000 exactly, then there's high likelihood that we're going to come down to here, and then of course you're losing key levels of support and potentially going into your bear market where if we look at the weekly time frame, the 200 EMA will step in and basically hold us and this would be your low basically around 23,000, but to lose that 1.272, I'm not seeing that at all. So let's take a look back at the daily time frame. So earlier on today on my Twitter, make sure you're following my Twitter. Earlier on my Twitter I gave you some technical analysis on Bitcoin, looking at higher time frames and lower time frames. So we're going to take a look at the daily and look at this fib, and this was the massive M pattern that I was talking about that I didn't see many, or I didn't see any at all. Maybe I might be wrong, maybe some people that you follow were talking about it, but when we started initially dipping over here, like in the first few days of the dip, I was calling for this M pattern, telling you that if we lose 58432 and keep failing to get back above it, look, you kept on failing to get back above it, we are going to roll over to 49k, and that's exactly where we bottomed out, roughly 47 to 49k. We actually found the support at 49k. We did go below, and now we're going to look at the fib target. So from here to here, you swing low to your swing high. If you lose the 1, you're going to head to minimal, the 1618, and that's when right now we are confirming that as support. And if we close the daily candle like this over here is a bullish spinning top. That's if the candle closed right now. Of course, we got another 9 hours, but if it closed as is right now, this is a bullish spinning top. Because we're in a bear trend, this would be the start of your reversal, because this, in this case, when you see in a bear trend and you're at support, it reverses the trend. This is a reversal candlestick pattern. If you see it on higher lows, so let's say you're starting this uptrend and so if you see it over here, it's a bullish continuation. But if you're in a bear trend and you see it down here, it's going to flip the trend. If you see it over here in a bear trend, it's only short term up or nothing at all basically. So make sure you note that about the bullish spinning top, and it's the same note for bullish hammer basically. So when you lost your 1618 at 49k, look where you rolled over to the 2414 at 42,399, and you wicked down a little bit below because of that 1414. So this is why, in my opinion, your technical targets to the downside have been met, and then we have this descending resistance now being flipped into support exactly, and you've had now 1, 2, 3, 4 days of failing to break back below. You were below for 4 days, but by the end of these daily candle closes, these 4 daily candle closes, you now sat on them as support. Of course, this is an open candle, can't make a judgment on it yet. That's why we can't even say it's a spinning top. But if it did close as one right now, let's say the day ended and it closed like this, it would be a spinning top. But again, can't make decisions on an open candle, just the candles before. So you did have wicks to the upside, and that's why we came back down to the 200. So as long as you hold the 200, we're going to continue. Remember guys, in many videos in the past I said once you hit the 2414, you start working your way back through the fibs, and if you can confirm that 1618 support, which we are doing right now of today's candle, we will eventually work our way back to the 1 and hopefully confirm that support. Once you're above 56,400, I can say with 100% confidence, once we confirm that support, 100% confidence that we are going to continue up now, because you're getting back above this support that's obviously been flipped into resistance. But you can actually see here, you've never even back tested it as resistance. So what this means is that we should, in theory, come back to it and of course break above it. If you do get rejected here, this is where we're going to see that bear market basically. We need to get back above the 56,400. It's not that we're below it, we're going to continue down. It's just to completely say, yep, we're done going down. We need to get back above that, of course, and then obviously form a bullish cross, because right now we formed a bearish cross, and I've told you in the past, when you form the bearish cross, you come to the 200, and so that's where you want to find your bottoming out structure. You can go through it, above it, through it, above it, but as long as you're not hitting your head on the 200, which we never did in the first place, you didn't touch it here, this is the first touch, and actually you closed above it, so you never smacked your head on it as resistance, and since closing above it, you now wick back down and you actually come back up to where you are right now over here. So you have formed some sort of double bottom. Let's take a look at not the 4 minute, the 4 hour time frame. So yesterday I gave you this ascending triangle, and the technical target was met over here. And so now you're in this larger one basically, which I also told you about. I said once we meet that technical target, it's highly likely that we're going to form a larger double bottom that we need to see like on the daily time frame or something like that, so to say. So what I do like right now is, since I made my update on Twitter, look at that bounce right there. My goodness, if you close like this right now, this is something called a bullish engulfing candlestick pattern. This is, in this case, because you were coming down, this would reverse the trend back up. Or you can say, because you're already in this short-term uptrend, you're continuing the trend. Basically, look over here, bullish engulfing. When the green one eats the red one, it has to eat a red one. It can't eat a green one. This over here, this green one's bigger than this green one, but it's not a bullish engulfing. This over here is a bullish engulfing. If it closes like this, bullish engulfing. So when the green candle eats the red candle, vice versa as well. So look here, red candle ate the green one. What happened? Boom, capitulation. So green candle eat the red one, boom, we should go. So I also placed the fibs on in the chart earlier from here to the top. And how I said that we know it's the top because it started dropping. And look where we bounced off exactly, guys. The 0618 at 48,905. And this was already this larger trend line, okay? This larger pink trend line. So amazing confluence. We had this ascending trend line, the descending trend line, and that 0618 all sitting in the exact same location. That's where we've had this nice bounce. So what we want to do now is obviously find support, hold key levels of support, and if we can do that, we'll continue up. If you do lose this 0618, you're falling out of this ascending support, you're going to roll over to the 1, where if you even just close below this support, we're probably most likely going to come down to the 1618 as a minimal target at 44,334. And if you do lose that, you're going to come down to these lower targets, which is this larger falling wedge target basically, the support of it, sorry. So yeah, not much more to say. Of course we can go to the 1 hour, but we're in this ascending triangle at the moment, and your technical target is sitting at, once we break out, sitting at 57,560. That is beautiful, guys. And remember, when you break out of this, that's when it validates that. If you do lose this as support, you're coming back into the pattern. Remember, this is a bullish pattern. So as long as you've let's say you, oh, didn't mean that. Let's say you break out over here, fall back to it, lose it as support. As long as you hold this, you'll eventually break back above. And if we can confirm it as support, then we're going to head higher to that target up there. So what I do like is on the 1 hour time frame, you actually did form that bullish engulfing pattern. So let's take a closer look. So you had a doji, the red one's a doji because you had equal wicks to both sides, and then the body basically being non-existent, showing that no one's in power. But when you're at key level of support, meaning the 0618, meaning this pink trend line, and meaning this pink trend line here, the 3 points, perfect confluence, 3 reasons why we're going to bounce from here, 3 reasons why this is perfect support. And when you're at a major key level of support and you see a doji, the red candlestick with wicks on either side being very equal or very close to being equal, and this is actually a reversal candlestick pattern. You should reverse the trend from here. So we've gone up, come back down, doji, reverse. Doji at key level of support, reverse. If you see a doji mid trend, most likely just going to continue the trend you're already in, guys, okay? So what else is going on? You had this bullish spinning top over here, green one, wicks below the 0618. I opened here, I went down here, came down here, the bears push you down here. I didn't like being down here. I pushed back above my entry, and that's why the candle's green in the end, because you were down here, you got pushed back above your entry point. That's why it closed green, showing that the bulls stepped in, the bears the bearish pressure depleted, and the bulls took power. And what we've seen after that, boom, a low holding that support, and after that a bullish engulfing pattern. The green one, when I place it on top of the red, you don't see the red. So that is beautiful, guys. So right now we can take this over here as the bottom and this over here as the top. Swing high to swing low. So let's get these fibs out. Swing high to swing low. Once you break above the 0618 at 50,686, which we have done now, we need to backtest that support. Let's say we do roll over to the EMAs. That's fine, as long as you get back above that 0618, which you should anyway, because you've held this 0618. So we're basically retracing to that 0, and on the way to that 0 you get above this 0.618, and as long as you can confirm that support minimal target at the top of this falling wedge, 54,157, where we could fall back to this large ascending triangle support, and then obviously head up to our ascending triangles target just above the 2414. So I'm expecting an overshoot of that 57,089, an overshoot of that to 57,600 basically. Of course, lose this support when you come down to retest it. You should hold this ascending triangle support, and because you're in a bullish pattern, you could come all the way to the apex, back test that support, and that's when we would continue up to here. If you lose this support over here, that's where we have that rollover. Lose that one, and we come down to minimal the 1618. Perfect, guys. I hope you enjoyed today's update. I'll catch you in the next one. Peace.